anticipating for the next week, especially about the key indices, Nifty and the banking index. Alongside, we're going to talk about a few stocks that should be in your radar for the next week, both on the long and short side. So before we start with the presentation, a quick disclaimer that this webinar is all about the insight, the observation that we have regarding the markets. Please don't consider them as a trading recommendation or investment recommendations. Take help from your financial advisor before executing them. Now, first talking about the markets. So last two trading session, market turned the turtle, and we saw that from 18,100, it finally settled around 17,500. So a cut of nearly over a 1.5% is something that both Sensex and Nifty observed. And IT, which is the constant on the negative side, shed over 7%, nearly 7%, alongside with reality, media, pharma, and auto, which ended the cut in the range of 2 to 3%. Similarly, on the positive side, banking is the only constant that we have. And then we saw some buying interest in the metal and energy counter also, which held the index to end in green. But comparatively, if we talk about, banking and financials, the banking index made a new record high. But the continuous selling in the IT pack, that kept the index, to cross the major hurdle. So that we're going to discuss in the following slides. In line with the sectoral trend, the banking stock, IndusInd Bank, was among the top gainers, gained nearly 8%. Then we had stock from the auto pack also, Maruti, which did well. Then Power Grid, NTPC, and Adani Ports from the various sectors that managed to end with decent gains. But on the weaker side, on the top losers, you can see the four big IT names like Infosys, TechM, TCS, HCL Tech, which shared in the range of 5 to 8%. And then we had this last moment slide in some of these auto names, two-wheelers names rather. Bajaj Auto, Hero MotoCorp both witnessed sharp decline, but Hero MotoCorp declined over 5% this week, and that results in among the top losers. So now what to expect next when it comes to the key indices. So this is the Nifty index. Last week, if you remember that we discussed about 18,100 would be the next major hurdle. We said this that this zone, the previous swing high, is going to be the major hurdle, and Nifty made 3 attempts to surpass that zone, but it couldn't. And today we saw a sharp decline. This red candle you can see as today's candle. So what it indicates is that we were hearing this, that especially in the market like this, wherein the global markets are completely on the back foot, especially the US markets were down and out completely, but we were still holding strong. But today's decline somewhere shows that we are not completely different from what we are seeing in the global market. So yes, the situation is comparatively stronger. There's no doubt about that. But at the same time, making a decisive breakout, especially when the global markets are not in sync, it becomes difficult. So that is what we are seeing now. And what to anticipate next? So you can see this line, we call it as a trend line in technical analysis. So Nifty has been managing to hold this level, and now we are again at this zone. We are retesting this level, means this trend line. So this zone is close to around 17,500, which was almost the day's lows as well. So in case if we penetrate this zone and sustain, then 17,400, 200 is something. This 150 area, the previous swing low, would be the area basically where we're going to see the Nifty inching in days to come. And in that case, this consolidation, that which we were anticipating that could end up with a breakout here, might continue for a time being in this broader range. So 18,000, 17,200, or 150 to be precise. So this trend line 17,500 is the critical zone now for the next week. A break would trigger this negativity to continue. Otherwise, there will be a respite and an attempt to inch towards 17,800 to 18,000 level, which would act as a resistance area. So indications are in the favor that we are going to consolidate further, because if you see the last 2 trading days of decline has engulfed the gains of last 5-6 trading sessions. So that shows that it's not going to be a V-shaped recovery or a very strong recovery, especially like after the candle like this. There's a possibility that we might consolidate further. We might break this area also, and 17,400 to 150 could be the area basically where we're going to find support. But it doesn't mean that the trend has reversed. It's just that the consolidation have extended, which we were anticipating. It could end here. It might continue for a time being. But the overall bias, I would say, is still on the positive side, because banking index had made a new record high. Auto index are doing well. So except IT and pharma, almost all the sectors are doing well. So I don't see any reason to turn bearish on the market. It's just that the consolidation is going to take more time. So this is what the indications are. Now, banking index. So you can see this zone. Last week we talked about this record high is 41,500, 42,000 could be the area basically where the banking index might face resistance, and that is what exactly we saw last week. We almost it means we made a new record high. We didn't test 42,000 level, but we made a new record high above 41,800 zone. And from the last couple of trading sessions, we were seeing profit taking. But comparatively, today also we saw that the banking index managed to end stronger. When the Nifty lost nearly 2%, we were just down by around 1% in the banking index. So that clearly shows that the buying interest is still there, and they are comparatively resilient in the market like this. What to expect next? So this zone, I guess we talked about this zone earlier also, that 39,800 should be the area basically which it should hold to maintain this momentum and to inch toward the new record high and sustain at those levels. So 39,800 will continue to act as a major support. Then 39,200, it could be closer to this area, which is going to be the next support. So a buy on dips, something that one can continue with, but largely in the private banking names, because PSUs, they are they tend to react more aggressively on the downside also. So except SBI, avoid other PSU banks. But in the private banking space, Axis, ICICI, SDFC, they all looks okay. Kotak is not participating yet, but it's not looking weak either. Means very positional weak or something like that. But yeah, preference should be given to ICICI, Axis, and SBI. So in that order. So upside again, what we discussed last week, that 41,500 to 42,000 is the zone basically where we're going to consolidate and witness some profit taking again in case if it inch further. And it's healthy consolidation. Why we are saying this? Because when you retest the previous swing highs, the record highs, it's obvious that a stock or a index take a breather before making the next up move or a down move. So it's completely okay as long as we are holding above 39,800. The bias would remain on the positive side. Look for buying opportunities, especially in the private bank names. Now we talked about index. Means in the Nifty, the trend looks sideways to negative. We are anticipating that below 17,500, this pressure may extend further towards the level of around 17,400 to 150. And but in the banking space, we are in a much better position. They are comparatively stronger. So here we can continue with the buy on dips approach. Now coming to these stocks. So banking stocks for the obvious reason should be on your radar, and especially from the banking pack. This is Axis on the weekly charts. So you can see that in Axis this week it ended almost on a flat note, but overall the structure looks very strong. So in case if there'll be any profit taking in this zone close to around 760, 750 area, utilize, one can utilize this dip as a buying opportunity instead of looking for shorting position in the private banking names. Because ICICI are already trading at the record high, SBI is already trading at the record highs. Here we have this potential to retest the highs of around 857 and 900 plus zone in weeks to come. So any decline, any consolidation around the current level can be considered as a buying opportunity. Apart from Axis, Bharti Airtel is one such name wherein we are seeing resilience. So Bharti, we have other reasons also to support our thesis that it's a buy on dip candidate. The stock has witnessed a consolidation breakout. This range, you can see that it has been trading in this range for almost like a year now, and we have recently seen this a breakout from that range. So it might witness some profit taking in line with the profit taking in the market, but we expect this 700 740 zone to hold. So again, in case if it witnesses any dip around 740 760 zone, one can consider it for accumulation in cash segment, for the higher targets. So possibly in the range of around, let's say 850 to 900, one can positionally target in Bharti Airtel. So stick with the counters which are less volatile. Stick with counters where we have comparatively stronger candles, means they're relatively stronger in the market like this. So Axis and Bharti definitely falls into that category. Now, what if the correction extends further, because this is what the indications are, especially from the Nifty index. So IT is definitely should be on your radar. Infosys, TCS, HCL Tech, the large caps are anyways, they are also witnessing pressure. But from the mid cap space, Coforge, you can clearly see the kind of decline that this stock witnessed in the passing week, and we expect this decline to extend further, and maybe closer to around the long term averages, close to around 3000 level. It might take a breather. So Coforge for shorting is something that one can consider for the next week. And apart from IT, one sector which is still on the back foot is pharma. So pharma also, except Cipla and Sun Pharma, there was hardly any participation from any pharma counters in the recent uptake. So, but yes, whenever the market declines, they always witness a participation on the downside. So this is what we are seeing. So Dr. Reddy, it was anyways trading under pressure. It was not forming any decisive candles when it comes to the upswing. But in the last two trading sessions, we saw a very sharp cut. So indications are in the favor that it might inch lower towards the level of around 38, 37.50 in days to come. So this could be one candidate for going short. So for long side, Axis Bank, Bharti Airtel, but only for accumulation in cash. Avoid future positions because the volatility might remain high, considering the kind of mixed clues that we have from the domestic front and globally also. Shorting side, Coforge and Dr. Reddy's. Again, since we are seeing extreme volatility, look for option strategies or through option puts spreads. You can consider going short in these stocks. So yeah, that is all from the presentation part. Can we have this quick poll, please, and then we'll start with the Q&A session. So just quickly give your feedback, and so that we can start with the Q&A session. So in case if you have any question, you can put that in the chat box, and please restrict your question to the topic, means indices and the stocks that we've discussed about, and no individual stock specific queries, please. So please quickly fill this feedback so that we can start with the Q&A. So Mr. Linga, you can put your question in the chat box. Not in the chat box, sorry, in the Q&A box, you can write your question. All right, so we'll start with the Q&A session now. So I'll request, please stick to the format that we discussed, that anything related to the indices, any particular sector, definitely we can answer. Stock specific queries, please avoid. In case of the time you're going to allow us, we'll definitely come back to that. So Aman, IT pack as a sector, as we've been discussing, that it's trading largely in line with the global market, especially the US market, and we are not seeing any respite in the US market. Yes, there was a rebound or a relief rally that we had in the US market, but again they are down and out. So it's almost mirroring the US market right now, and indications are in the favor that it might inch further lower, close around 8 to 10% kind of a cut is possible in the IT pack even from the current levels. So that's why it's prudent that look for shorting opportunity if you are a trader, and if you're an investor, you may consider accumulating in the quality IT counters with a long-term view, because the downside seems capped after the kind of correction that we've already seen. So it's a very different approach for as per your whether you're a trader or whether you're an investor. Tire industries, Mr. Ashwini have asked this question. So yes, we have seen a very strong traction of late, but today, with the decline in the market, we saw that especially in the broader markets. So while the the benchmark was down by just around around 2%, the broader indices shed nearly around 2.5%, more than that, in fact. So this situation, we usually see that the stocks which are already in profits, clients tends to book profit, and that is what we saw across the board in the mid cap space. The advanced decline ratio in the broader market were also was indicating profit taking stance, I would say. So keeping that in mind, the tire stock might also witness profit taking in line with the overall market. But comparatively, stocks like Apollo Tires, JK Tires, and these two names, called Balakrishna Industries, is still trading laggard within this space. And CET also, we have seen a decent traction. So some of these names, they are looking comparatively stronger. So one can accumulate if the view is long term, because the overall the kind of surge that we are seeing across the board is not going to fizzle out anytime soon. So Rishikesh have asked, can the market see levels of around 17,200, 300? That is what we've discussed, Rishikesh, that below 17,500, it's quite possible that we might inch toward the previous swing low, which was close to around 17,150. So Shiva have asked, can we expect Nifty around 16,000? So again, I would recommend that, like we used to discuss in the previous webinars, that whenever the markets were going up, so are we going to make a new record high? So please don't start making assumption or trying to higher level which is not in sight. The only thing that we can do as a participant is to follow the market. So as of now, indications are in the favor that the market may correct, 100 to 250 could be the area basically where we have the first support. Worst case, it could inch towards 16,800, but that is not the indications are. So the idea is to keep following the trend and sticking to the positions accordingly. So as of now, indications are not in the favor that we're going to see 16K anytime soon. IT, Girdhari, we have already talked about this, that in case if you are an investor, you can consider accumulating the quality stock, because the decline is nearly 10% in the IT index left after the carnage that we have already seen. But if you're a trader, definitely you should be on the short side. So Rajesh, it's not about buying naked option, in the market like this. See, in case if you are trading against the trend, in case if you are trading, as we were just discussing, that it might come closer to around 17,200. But if you start buying 17,000 put in the anticipation at 17,500, that next week we are going to see those levels, that is not the right strategy. So you should be in sync with the reality, how option market works. So in case if the markets are trading at 17,500 and you're buying a 17,500 call or put, depending upon your the market direction that you're anticipating, this is the right way of doing things. And especially in the second half of the month, it becomes more obvious that you should stick to ATM or ITM strike. In that case, you're not going to lose much just in the anticipation of any random levels. You will be largely in sync with the market performance. So there's no harm going ahead with the naked option position also, but it should be in sync with the trend, and stick to the liquid counters. In case if you're trading stocks, stick to the liquid counters. So Mr. Benjamin have asked for cement counters in the coming week. So cement, we are seeing overall, if you talk about the performance is exceptional, but off late we started seeing volatile swings, especially in stocks like Ambuja, ACC, Ultratech, the top names from the cement space. So I would recommend that one should be slightly cautious, especially from the short-term trading perspective, because the kind of swings that we are seeing is very difficult to maintain stop losses in such kind of swings. So if you are a very short-term trader, stick to the comparatively less volatile low beta counters within the cement space, or let them stop to stabilize. In case if you are willing to buy only cements. So as of now, indications are in the favor that this volatile swings may continue in days to come as well. Okay. Please. Okay, there's several questions on Infosys, so I'll just answer this for the benefit of larger audience, that what we are anticipating in Infosys. So Infi, see, the last time when the stock declined, it made a low, or you can say this, it consolidated around this zone of 1350, 1370. So basically we are at those levels, which result in recovery or a rebound last time. But this time around, the candle, because this week Infosys have lost nearly 9%, and the way it closed, indications are pointing that it might inch toward the level of around 1300 to maybe closer to 1200 levels also. 1200 is a major support area for Infosys, at least what the indications are. So fresh buying, avoid shorting, through option strategies, one can consider like, buying 1350 put and shorting 1300 put is something that one can look at. Depending upon your risk appetite, you may consider this strategy. Okay, so we have answered this. IT pack we have already answered. Okay, so banking, as we've discussed, Rinku, it looks very strong. Comparatively, it's still in a very stronger position. So private banking names, ICICI, Axis, looks comparatively stronger. So one can continue to accumulate them. You can continue to hold them if the view is long term. In case if you have a trading view, in case if we are holding in futures, it's no point like, whether they are strong or weak. You should have stop losses in place. In case if it triggers, you should exit. This is as simple as that. But if you're an investor, there's nothing to worry about when it comes to the banking stocks. Pharma sector, Rajiv, we just discussed that apart from IT, the pharma space looks weak to us. So avoid longs in pharma. Though the Cipla and Sun Pharma, they are still holding strong, but overall the structure looks weak, especially when it comes to the pharma index. So there's no point like, looking for buying opportunity in the sector where majority of the counters are on the back foot or, witnessing pressure. So paint stock, one needs to be selective in this space because Asian Paint still looks strong. Bajar Paint, it's in the middle of the consolidation period. So we might not see any major swing. But Asian Paints, once the market stabilizes, we believe that it may make an attempt to, retest its record high. So comparatively, Asian Paint can be considered. Okay, so it's more of stock specific. All right, so we have answered all the queries related to sectors and markets. So thank you everyone for joining in. Next time, same time at 4 o'clock, we'll connect again and we'll talk about market and a few stock ideas as well. So till then, thank you, and we can end this.